Hey folks, Dan Frio here with your closing bell for January 5th, 2025. So mortgage rates came down a little bit today. Was it because of the actions in Venezuela? Well, if you look at the overall markets, kind of looking that way. U.S. Venezuelan actions, Dow Jones hit a record high. We have the S&P at a record high probably all the way across the board. What is happening behind the scenes and what's causing mortgage rates to move today? Well, that's what we're going to talk about in today's video, folks, because if you're watching this video, most likely you're a homeowner, maybe you're a home buyer trying to figure out what's going on with those and why. And my goal is to come in and explain that to you each day because my name is Dan Frio and I'm actually a federally licensed mortgage loan officer. So if you're out there looking for a mortgage, I'd love to help you. So what we saw in the interest rates today, we had mortgage rates come down just a little bit. The bond market had a little bit of a rally today, but look at the overall markets right through here. We have the Dow Jones at record highs all the way across the board. We have cryptocurrency still rallying. And we got oil. Oil's up a little bit, but it's still below $60 a barrel. Now you might want to ask the question, Dan, why do you talk about oil? Well, we have our 2026 mortgage rate forecast coming out next week, and you're going to understand a little bit more after watching that video why we focus on oil, because oil is a huge piece of inflation. So if this confuses you, I think it confuses the Federal Reserve a little bit more as well. So let's get over. There was an interview with one of the Fed officials today, and why we're showing this to you is because even Fed officials right now really don't know what's going on, because in one breath he's saying, well, inflation's way out of control and going up. And then on the other breath, he says, well, they're trending down and maybe they're moderate. So I'm scratching my head here, but watch this video, and when he comes back, I'm going to give you my take on what I think inflation is going to go from here, the oil prices, Venezuelan actions, and really, truly, what's going to go on with these and the whys. So let's take it over to CNBC's interview and see what his take is on inflation, and then I'll give you my thoughts on all this after.
I don't think we're going to be surprised that inflation ends up being much higher than we are seeing right now. I think the inflation risk is one of persistence, that these tariff effects take multiple years to work their way all the way through the system, whereas I do think there's a risk that the unemployment rate could pop from here.
Well, that's really weird then.
Okay, but just back up a second. Even the Federal Reserve chairman came out and said, and I remember this specifically, he said it was a one-off. And he's basically said tariffs are a one-off, and it's not really going to affect things. It'll do that one pop, and then it'll stay from there. So he's kind of contradicting what the Fed president's going to say. That's number one. But let's continue with the interview.
We've been above 2%, 50% above 2% for 2 years then. The Fed has totally missed that target, and we've just cut 4 or 5 times. So that makes no sense. Then you've moved the goalpost to 3%.
No. I don't think we have moved the goalpost at all. I think the debate that we've been having at the committee is, we know that tariffs affect goods import prices. Do you count that as a one-time effect, or do you think it leads to something more persistent? That's the debate that we've been having.
Right, but the persistent inflation hasn't really had anything to do. It was already persistent long before the tariffs.
Because of the COVID effects. I agree with you, Joe. I mean, that's why it's not. Some people say it's so obvious we should be ignoring tariff inflation. Inflation's on its way back down, and just be cutting dramatically to support the labor market. I'm not there either.
But if 2 was really your target, you wouldn't have cut at all.
Well, we have two sides of our mandate. Right? Inflation is slowly trending down. The unemployment rate has gone from 3.6 to 4.6. Right. So we're moving in the wrong direction on the labor market. We're slowly moving in the right direction.
I'm just devil's advocate. I wish.
So you now as confused as I am. So now the Federal Reserve saying inflation's a one-off, but maybe not a one-off. It's way too high now and going up, but now it's steady and coming down. So if you're confused with this, let me roll in and give you my thoughts on this. So let's roll over to the Venezuelan and oil situation. So what oil is going to do is, if oil prices stay below $60 a barrel, it helps inflation tremendously. Think, it's in everything. So my thoughts are on this. Let's get over to what the Federal Reserve, they truly monitor. So the Federal Reserve controls that rate right over there. That's the federal funds rate. And this is they're going to come out in a meeting in a couple weeks and they're going to do nothing with this rate because these things are what they're looking at. So right now, here's what we see. We have inflation. Yes, it's above the 2% trigger. Where is it going from here? I think this could trigger up just a little bit more. And the reason being is the January effect. And I'm going to explain the January effect in my 2026 forecast. But don't be surprised if in the short term we have a little bit of a bump in inflation numbers. And then from there, I'm saying Q1 might be a little bit, uncertain, but Q2, that number is going to start to stabilize. And then when oil and housing numbers start to really take a bite in inflation, you're going to see inflation start to come down dramatically from there. Now, on the unemployment side, this is the kind of the curveball that we just don't know. So we're going to keep monitoring where the unemployment numbers are, or the employment numbers, to see how healthy the the economy. But the last reading on GDP was actually really out of whack, and I think a lot of companies just front-loaded. So a lot of the data we're getting is clouded. So my expectations are this. If you're looking to close in the next 30 days, maybe you're a homeowner. I got some advice for you. What should you do? Well, if you're a homeowner right now, you want to track rates. Maybe you keep seeing rates come down. You're like, I keep missing it. How can I do this? Or what rate actually makes any sense? Well, there's a tool over there. It's called RateWatch 2.0. Plug in your mortgage information and then put in the rate that you'd like to at least kick the tires on refinancing. What we'll do, we'll call you up and we'll go over the numbers, what your new payment would be, what the cost would be, and what your break-even point would be, because the costs are a huge piece of this puzzle. But let's say you're looking to build or buy, down the road. Well, let's get over to my expectations on where I think these things are going to go. It's the things the Federal Reserve monitors, and then where rates are going to go from there. So here's my expectations. On the PCE, the inflation side, we're going to have a little bit of an uptick in inflation in the next couple readings. That's going to scare the markets a little bit, but it'll be the January effect. So then you're going to have the unemployment rate, and this thing's the wild card. So we're going to focus in on this. Let me know what your thoughts are down below. Where you think the unemployment rate's going to go, and where do you think rates are going to go from here? But that's what we're going to focus in on. So I don't really think much at all is going to happen. So my expectations over through here, if you want to close in the next 30 days, just lock in. If you're a homeowner and your rate's at 7 something, just check it, see what these numbers do for you today, because these numbers might be around to stay. Okay, because the data that's coming out, inflation's really not going anywhere. It's not getting any better. It might just get a little bit worse. The unemployment numbers, we're not going to know. We're going to know some numbers on Friday. That'll give us a little more data that we need, but that's not going to be the end-all, be-all. So my expectations are we're not going to see really much movement all in the markets at all. So if you're looking to buy down the road, you're in a good position, because also what we got coming down the pike is in February, there's one Fed official that he'll be retiring early. Yes, early. And then we have the head poobah of the Federal Reserve. He will be actually setting his term. His term will be coming to a limit in May. So he'll be out. So by June, there'll be a whole new cast of characters. So yes, they'll be on the rate cut mode, but that's not the only thing that really affects these things over here. So every day I need you to subscribe. Make sure you post on my video or watch my videos every day so I can explain to you guys what's going on with these and the whys behind it. So here's what my long-term thoughts are, and I'll give you a sneak peek of my 2026 forecast. I think rates are going to be what I expected. 5.875 to 6.25. I don't think, it's going to take a little bit of work to get down below into the 5s, but those numbers probably won't be here for at least a couple weeks or maybe a month or so. So if you're sitting on the sidelines to looking to refinance or buy, maybe you lock in now. But again, if you're looking to close, 60, 90, 4 or 5 months from now, please just float on and make sure you reach out to us right over through here on my website. Not only do we help homeowners, we can help you get into a house. So if you're a first-time home buyer, you're looking to buy a second home, investment properties, we can help you with all these things. So check out the programs. We even have investor loans like DSCRs. Bet you didn't know we had those. And then also one other piece of the puzzle, if you've already got a quote from somebody, we might be able to take that quote and review it with over 30 different lenders. What am I talking about? Well, here's my slogan. My name is Dan Frio. I'm actually a licensed mortgage loan officer in all 50 states as well as Puerto Rico. The unique thing about the bank that provides me this license, they also are set up with over 30 other lenders to make sure when you call us, we can give you one quote with one application and one credit pool. So if you even have a Provo out there now and you have a rate locked in, why don't you send it and upload it into our loan estimate review tab right through here. We can review it with our 30 lenders to see maybe we can get you a lower rate, maybe we can get you lower fees, maybe we can get you both of those. And if we do, I hope to win you as a client. So make sure to subscribe over there so every time I post a video, you get an alert. But if you're out there looking for a mortgage, folks, I'd love to help you out. And hopefully now you know a little more of what in the heck's going on with those and why. Thanks for watching. See you tomorrow, folks. Bye-bye.